Sarah is the owner of Dominion Lending Centers. She's been in the mortgage industry for about 16 years. Tell us a little bit about yourself before we get into it.
So two things is, so I have been in the mortgage world for the past 16 years and, have owned one of the DLC franchises for a long time. And, my focus has been providing clients with the best service possible and to, truly understand, the client's needs and to understand, how we can accommodate because everybody's situation is very, very unique. And so really focusing on providing, homes for clients, right? Everybody wants a home. That's the first thing that anybody, think of starting a family or, coming out of our school, leaving parents home. And so that has been probably number one priority for most immigrants coming to Canada, like myself. I arrived from Ukraine here. And so that has been my focus for the past 16 years is putting families into homes and creating a beautiful future for them, as well as creating financial freedom through real estate.
That's incredible. I know you have a team, you serve a lot of people, and we're also going to talk about buying a home in a recessionary environment and maybe some limiting beliefs or challenges people are having. Before we do that, though, what are the common trends right now in the mortgage world when it comes to affordability, when it comes to concerns about the market? What are the common trends that you're finding out right now?
So two things. I mean, I guess the biggest question is, are the interest rates coming down? Like everybody, we have seen such an incredible rapid rise in interest rates. So the biggest question that has been coming is, are we seeing the interest rates? So the question is, yes, I think we will start to see them. Predictions are by the end of this year. So hopefully, that's where hopefully we'll not see any increases. That seems to be the case. That's what we have been told and promised. And we will to see some of the interest rates slowly, I think gradually will start to come down. They have increased very rapidly. I think the slowdown in the market certainly that we're seeing right now is kind of asking the government, okay, the market has slowed down, it's cooled down, it's no longer a bidding frenzy. Now I have seen some of that as well. So if the home is priced right, I am seeing some of that. It is coming back, actually, surprisingly. So, which is good for, I guess, sellers, not so good for the buyers. But certainly the markets like, where you are located, the Kitchener, Waterloo, Guelph areas that are still, very affordable. You can buy homes, under $1 million. You can qualify. I am in Toronto area. I mean, obviously, as a mortgage broker, I work across. It doesn't really matter to me, if you're in Guelph or if you're in Toronto. But it is a lot easier. I've seen transition where a lot of people working from homes. It's a lot more affordable. They are living more in areas such as Guelph, Kitchener, Waterloo areas. It's a lot of jobs. Tech is big. I mean, I know that we've seen some slowdown. We've seen some slowdown in the construction world right now, right? So a lot of projects are delayed. A lot of projects are canceled. So, we are seeing some of that. And that is now people are saying, okay, do I need, if I don't have two incomes, can I live with one income? And with that, can I move to area which is more affordable, like, the Kitchener, Waterloo, Guelph area? I have a client, for instance, that lost a job, to be honest with you, last week, and they are now looking to sell a home and move altogether to Portugal. So they just decided that, what, we've got enough money, we can sell a home in Canada and we can retire in Portugal. And the wife was now working, the husband, somebody who's was working for all these years, now lost a job and decided that that's what we're going to do now. So you are seeing transition. People are really thinking of, and as he said, they didn't think of that before. Like before COVID, nobody was thinking we're going to retire. Nobody thought, I'm going to lose my job with the recession, all that stuff. So, all kinds of things are happening.
It almost seems like they're reevaluating their assets, right? If they don't need to
Correct.
be here, they're figuring out another life stage, whether it's moving down south to move to Portugal, other areas. It's interesting because I find that, and correct me if I'm wrong here, that there's a lot of wealth transfer from older parents that are allowing their kids to get into the market because they've owned real estate before or they have equity in real estate. Do you find that
That
that's going to change if people do not get into the market and maybe take action, that they're not going to be able to transfer that wealth like their parents are right now?
Yeah, I mean, that is, you're absolutely correct, Sam. So we are seeing a lot of wealth transfer. I am seeing a lot of people who are inheriting money, with COVID, grandparents passed away. The money has been, passed down to children, grandchildren. So we are seeing a lot of that. And it is becoming harder for people, to get into real estate. And if it is harder, then, to pass down all of that for generations to come, so to speak. Real estate has been a big part of it. And that's why I think that there are still opportunities. There are still pockets where you can buy real estate. Toronto is very expensive, Vancouver is very expensive. But there are areas outside, such as I mentioned, like the Kitchener-Waterloo, the Hamilton area, the Windsor area. And if you are working from home and you're no longer commuting, or maybe you're commuting for a day to the office, right? Where it's like, okay, I can manage that. I can go for a day, I can work for a day, and then, come back home. Or 2 days. So with that transition, people are thinking, where else can I buy? What is more affordable for me? And if I have to work on one income, or if whatever happens, all of that stuff. So I think that those are all of the important things that people are considering and asking a lot more questions. I think people are, starting to become more frugal, and think that maybe I need to save for a rainy day, so to speak.
That's a great point because like with Toronto, it's an immigration hub and then they disperse from there. And there's a lot of
Correct.
studies that like in the coming years that's going to increase with housing demand and people coming here. We actually recently did an event on why move and invest in Waterloo Region, just because it's such a big demand where we just had a client that purchased a bungalow. And if affordability is a challenge, there are improving the income of the property, adding an income suite downstairs. I think he bought
Totally.
it for, yeah, just in the low sixes. So there's a lot of options for people out there. Now, when you think about the mortgage industry right now, when you think about private money, I know private money's been a lot more common nowadays. Are you finding that people are just not able to keep up as much with the debts on the higher properties, and there's more people buying in the lower price properties? What are you finding right now in that area?
Yeah, I mean, I definitely would say that people are worried because on average, everybody's mortgage increased by about 1,000, right? That's an average, $1,000 that people didn't probably budget for, and we got used to incredibly low interest rates, variable interest rates. Doing this for the past 16 years, I would definitely say that people were, everybody wanted a variable rate, and everybody wanted, how much is my payment monthly? Nobody asked, I am going to, like, I think it's like prepayment. About 3% of people prepay their mortgages earlier, so most of the people had a great lifestyle, 2 cars, travel, kids went to great schools, activities, all that stuff, had a better quality of life. And I think now people are asking themselves, okay, you know, where can I save and everything else. So we're seeing more and more questions about, can I afford this? What can I not afford it? And people are probably thinking more for the future, but the main thing is keeping their head above the water to make the payments at the moment.
Right. So do you feel that people should go variable or fixed? What's your thought process on that when you're talking to a client about coaching them on their financial situation?
To be honest with Pinas, I mean, it is such a interesting question. It really depends per client, right? Because we are probably at the highest interest rates at the moment. I think the rates will slowly, gradually start to come down. So if you lock yourself into a 5-year rate, is that the right thing? Maybe not, but maybe a 2-year or a 3-year may be the right thing, right? I think it truly comes down to affordability, and it truly comes down to what the client qualifies for, right? So sometimes it's easier to qualify for one versus the other because, of the income, debt, self-employed. There are so many different variables to look at. But I don't know if, I can advise, say, this fits every single client, because everybody has a different plan. I'm going to buy this, or I'm going to refinance this, but in 2 years I'm going to do this, Sarah, but in 3 years I'm going to do this. If it's a 5-year, if it's a fixed rate, there's always IRD, interest rate differential, which is always higher than 3 months interest penalty, right? There's interest rates for the 3 months. So a lot of that taken into account. I have clients who are like, oh my God, my rates have gone up, but now they were like, I'm selling my home and my penalty, is this. So it is the rates are fairly complicated. Of course, having said that, a lot of people probably said, I wish I've locked in my rate, at 2.5 or 3% and just had it for 5 years. But today I think it really is, let's look at all the options, let's discuss all your payments, and what are you looking to do with this property? Are you going to be staying here? Are you going to be moving? And as you said, a lot of our clients are taking equity out to improve their properties. So many people have chosen not to move anymore, but do an addition, create an office at home, maybe put their 2 children in one bedroom and the other one now is an office where the husband or wife can work from. Maybe they've now renovated their basement. Maybe they've added some kind of a front porch or veranda or something of that sort. They're building the pool so the kids have something to do. They're not taking that extra vacation the money went into. They're adding a hot tub right now, right? So I mean, I'm seeing a lot of that where the clients are now saying, this is what we're going to do. We're just going to enjoy our home a lot more.
So they're making a lifestyle shift, and that comes from having equity in the home to do that.
Correct.
I think it's a
Big time.
huge thing. So if someone's on the fence and they're not sure about whether they should look at buying a home, why would real estate be a good vehicle for them to at least create the flexibility later on through rate changing environments and things like that?
I tell you, between us, I mean, real estate has always been, for I think thousands of years, people need a place to live. If you have children, your children need a place to live. And if you look at Europe, I came from Ukraine, where the home is being passed from grandparents to parents to grandchildren, and so it's intergenerational. Look at Italy. You have a triplex divided, grandparents, parents, children all living together in one community, because it is so incredibly expensive to buy real estate. So I think it's a great investment from that standpoint. We still need places to live. But also, I think, especially here in Canada, having that equity saved up to put your children through school, to have ability to retire, should you have an emergency, health wise. If you have somebody who, let's say, two people, one lost a job, they can, lean onto their line of credit for some payments, for some expenses. So I really think that there aren't many vehicles such as real estate, and a primary residence being, tax free. You don't, there is no capital gains. It's, pure, savings. So you've bought a property, it's appreciated, it's all money in your pocket, tax free. So I think from that standpoint, maybe TFSA, there is nothing really that is that stable. It's a tangible asset as well. If you don't live in it yourself, you can rent it out. Rents have gone up. You can, have higher rental income. So I think there are lots and lots of benefit if you look at it from that standpoint.
That's a great point. And we were looking, and I was like, if you could speak to this, like in February 2022, where the prices were, say, like around $1 million or 1.1, and let's say that house now is 800,000. I
Yeah.
believe the monthly payment was actually only like 60 or $70 less on that same property in that market. Even though the market shifted, they have less of a mortgage balance, and their payment, which they're concerned about. So share with me a little bit more about what you think about that, because I feel like that's a very common challenge with clients, but they don't really see the big picture when it comes to that.
You know what? You're absolutely correct, Sam. So yeah, so totally, the real estate value is lower, as you said. So you were talking 1.1, and now it's 800,000. So you're having two to $300,000 saving, and then you are having, let's say, if you buy a rental, your rental income will be higher as well. So I now have clients who are getting into the rental income world, who are saying, well, those are the things that they consider, and even though my interest rate maybe is higher at the moment, but lower purchase price as well as higher rental income is offsetting that. We've seen also longer amortizations. People on rental properties taking longer amortizations to lower their payments. Refinancing, like I just had a client refinance two of their homes, their primary residence and their rental property. We refinanced that, and they're paying right now less than they were paying at that time because of increased amortization. So we were like, okay, it might take you a bit longer to pay it, but your monthly payments are lower. And so if you buy a new property, you have ability to get higher amortization, higher rental income, and cheaper price in comparison to what it used to be, let's say a year ago, right? So February or a little bit over. So you're absolutely correct about that. I do think it's a great time to buy. If you are an investor who are looking to buy, I mean, I really believe that, you can put your tenants, you can, and there is such incredible shortage of real estate for rent right now.
Yeah.
There is
Yeah.
nothing to rent.
That's a great point. And too, like people are finding solutions like midterm rentals, or finding out if short term has a regulation there, they're just going midterm, or they're getting tenant screening services to make sure they have a great tenant in. We recently analyzed a duplex that was a $300 surplus in cash flow, which was incredible because it was a 34% on their money. So they're just someone, either they're going to live in it or own it as an investment. I think it's just definitely a great point for sure. So
Yeah,
Laura,
I'm in agreement. I am completely in agreement, Sam. I do think that you have to be very careful with the tenants. I think a lot of people are desperate, and you have to do a little bit more due diligence. That's a very, very good point. Do a little bit more due diligence, make sure they are the right tenants, their credits, their incomes, the past rental history. I tell clients, do due diligence, take your time, especially in this market where we're seeing recession, people are desperate, shortage of rentals. You want to be a little bit more, you want to be smarter about it, right?
yeah, absolutely. And if anybody needs any resources, we do have those available, whether it's front lobby or other resources too. So that's awesome.
Excellent.
So as far as we talked about the trends, when you're coaching a client holistically and you're helping them get approved or qualify, What's your methodology as far as helping them fix maybe any issues with their mortgages or just holistically helping them financially so they can build a good foundation?
Yeah, I mean, we work with clients as mortgage brokers. We work with clients, and quite often the clients don't qualify when they come to us. You know, a big challenge: they've gone through a divorce, they've gone through a bankruptcy, they are brand new to Canada, they may not have the sufficient down payment. You know, they're self-employed. Maybe they keep it more in the company. We tell them, let's if you wanted to buy a property, maybe you need to declare a little bit more next year. We can work with the numbers. So we work whatever the situation is. It is why I say that it's all individual, but we do take our time to coach the client. I think that's the difference where the mortgage broker really takes the time, especially us. We take the time to go coach them. We take the time to guide them. We take the time to educate them. And then, down the road, they will buy a property. And so that is what has been our, kind of claim to fame. Our success is coaching our clients, guiding our clients, and being there for them through the lifetime of the mortgage, or the lifetime of client owned real estate, which means like it's 30-40 years. So and then from there we help their neighbors and their employees and their family and their children. I mean, because they see the quality of service we are providing, and that's really what we kind of pride ourselves on, is that if you file for a bankruptcy, call us, we will figure it out. If you've gone through a divorce, call us. If you have lost a spouse or somebody in the family and you're now down to one income, like, we wanted to hear from you. We also work with let's say CMHC and agencies such as that, where somebody's lost a job, maybe we can help you put a basement, and be able to do something. There are all kinds of programs. Like, we wanted to hear from you when you have challenges, when you have difficulties, and we wanted to be there, to help you out and build the relationship, and that if there is challenge, you know who to call.
That's great. It seems like you definitely take a consultative approach as an advisor, because I find a lot of the times some brokers will just look at the rate and then the client won't know their rights. How are they going to service the debt? You know, we've had situations where people call us and they say, I didn't know what a variable and the term was up and I just took whatever and now I'm kind of stuck in the situation that's not ideal for me. So
Yeah, of course.
I think it's great that you are helping your clients through the entire life cycle of getting a mortgage, getting a home, refinancing, helping paying for kids' school, that kind of thing. Can you share with me some of the power about that too? Like, unpack that a little bit. You talked about how equity can be really powerful for helping them with increasing cost of living or, cost of putting their kids through school. Tell me a little bit about that, what you're finding and how that's powerful.
So, I would definitely say, I mean, I am a big believer in real estate. And I would tell you, I'm somebody, I came from Ukraine with no money, and I was able to, get into the mortgage business, build, equity through real estate. And I can see that down the road, being a mom, for instance, that it is something that, kids can benefit from. So I truly, truly believe in my heart that it is probably one of the best ways to provide for the future, not only for yourself but for your families. Like, it's a retirement, certainly, but then the other thing is, it truly, truly, I believe in my heart, is a place where your children will be able to go to school. You'll be able to help them maybe with the down payment. I mean, these days, that's what everybody goes to, the bank of mom and dad. A lot of people, a lot of first time buyers can't really afford to buy anymore unless they have a solid down payment from their mom and dad, right? So we are seeing a lot of that. We're seeing a lot of that happening. And if you don't own real estate, I really don't know how you're going to do that. Like, I truly, unless you have such significant, TFSA, RSP, significant investment or business or something. But I think, like, probably 70% of Canadians, I think it's pretty high real estate ownership penetration here in Canada, will deliver their rental income and what they pass on to their children through real estate. Like, it really is the highest by far.
Yeah, that's huge as far as, and a lot of people that do have wealth, they own a property too, and then that's been paid off by someone else. So that income
Exactly.
is all there. So they have more freedoms available. They can help their kids. And I think
Totally. And I tell
allowing
you this, like, I have somebody who owned pre-constructions, before anybody paid it off. Like, you buy it and 5 years later, it was so much money. I mean, it has been such an incredible way to also invest, through, without having a tenant, without worrying it. And then at the end of the day, you can assign that property, right? You assign that property and somebody else now owns that property. And so I think that those are the things that have been, so there are so many different ways to own and invest in real estate.
Yeah, and you mentioned two tax advantages. Like, I mean, this is not a tax show. However, like, even the fact that you don't get taxed on a refinance, right? So you can refinance that property again.
You can refinance your property. If
Yeah.
you have a rental property and you wanted to refinance it, you get refinanced. You don't need to pay taxes on that as long as you keep ownership of that property. It keeps appreciating. Like, yeah, definitely. If it's a primary residence, you can sell it. You can refinance it. And if it's a rental property, you can refinance it. That's usually what we tell people. If you sell, you have to pay capital gains. Or if you keep it, then you truly refinance, take some equity out of that. So yeah, there are definitely ways of doing all of that.
Have you seen the situations where people, let's say they're having a challenge with their payments, they're getting maybe a partner in to come in on the property and then take part ownership of the property? Are you finding that as well? Are you finding, I guess, what should people also be considering when they're refinancing the debt, like when refinancing and servicing that new debt? Could you just unpack that a
I
little bit?
mean, I would definitely say the biggest thing is to be ability to carry it. I think that, the ability to carry it is really what's important. So I think, now people always ask me, what is my monthly payment? Nobody really, as I said, looks and says, I want to pay this off. It's really is, what is my monthly payment? That is the biggest question that I'm always getting. What is my monthly payment? So as long as you're able to service your property, and, the property servicing comes with, you not only, it's not only the mortgage, but there is taxes, there is utilities. If it's a condo, there is maintenance on the condominium, right? So all of those things need to be taken into account. Your hydro, you have internet. And then if you're a first time buyer, I always tell people, like, budget for some furniture. Maybe you need $20,000 to buy basic furniture. So those are things to always consider, to be honest.
Those are great things for sure. So I know you own a company as well. Can you share with me a little bit about that too? It's recruiting, I believe. You're helping a platform to help people find work and as well.
Yeah,
Can you
so
share that?
correct. I do. So it's interesting. Is actually it started as, we wanted to help. We were doing presentations in women's shelters, and when we were doing this on finances, we would ask them, "What do you need?" And women would usually say, "We're looking for jobs." And so I started a company called Equal, EKWILL.com, and it started with, like, okay, let's help women with jobs. And then I'm Ukrainian. The war in Ukraine happened, and we started helping Ukrainians. And so now we are, just a platform that helps people get jobs. And a lot of our jobs have been, a lot of them in the construction world, because I've worked with a lot of builders for the past 16 years, and helping, place, get them jobs, carpenters, electricians, plumbers. I mean, I also see how much money you can make doing those kind of jobs. It's pretty remarkable. So many coming out of high school, getting themselves into the unions and being able, for instance, to earn that kind of money, or just getting into the trades and being able to earn that kind of money. And today, I would say it's very hard to earn that kind of money anywhere else. I see some of them earning more than accountants and lawyers. Like, it's pretty remarkable opportunity for people to get into the trades and build a business of their own. So we've seen a number of high school students, like, I have no
Mhm.
idea where to go and what to do, and then saying, well, there's such a big demand, I can, build a business around this as well. So, that's kind of how I've got into this, helping women and then helping Ukrainians. But now we just help somebody who's looking to get into and looking for a job, so to speak.
It's okay. We're gonna edit this part out because there's noise, there's construction, so it's all good. It's all good. We can edit it out. Okay, that's amazing. So how can you help people get qualified for mortgage if they are have how can you help people get qualified for a mortgage if they're not sure if they can afford to purchase now?
I mean, we have to go through the numbers. I mean, we would have to go through the numbers. We would have to put their down payments, their debts together. We look into their incomes, and things like that. And if it's a rental property, would it carry itself? What would be the rent and things like that, right? So we need to look into all of that and see what makes the most sense, so to speak, right?
Amazing. If you, yeah, I'll edit this part out so it's all good. That's the editing magic, right?
Sure,
Um,
Sam, totally.
Amazing. So, anything else you'd like to add? I mean, if people need to reach out to you, we're going to have your information in the show notes. Really appreciate your wealth of knowledge. You've helped a lot of people. You've taught at market centers in Toronto and other areas. You lead a lot of the mortgage agents. What are common things that maybe other mortgage brokers are not doing that, you can really, they could really, I'd say that when a client comes to you, that holistic approach, you mentioned that being important, but anything else that you'd like to add today?
I think Sam, like honestly, to say we have covered so much. It's really we're here to service clients. We're here to service people. We are here to talk to you. Doesn't matter if you've gone through divorce, bankruptcy, consumer proposal, you new to Canada, whatever it is. Like it's confidential. It's all private. We are here to support you. We're here to guide you. One of the best ways to get a hold of me is probably text me on my cell, which is 647-892-4437. Usually text me because if I'm in a meeting or like we
Yeah.
having a call right now, I cannot answer it. But no, once I have done, I can always reply to a text message, say, listen, I'm in the meeting, I'll come back to you. So I say that's probably the best way to get a hold of me. And then just talk about it. Like, let's figure out how we can help you.
That's incredible, Sarah. We'll really appreciate your time. We're going to make sure we link it in the show notes. If you need help, definitely reach out to Sarah. If you're getting things figured out, you're going through a renovation and need some help with that, and also the holistic approach to help you through that mortgage and beyond. So thanks again, Sarah.
Perfect. Thank you so much. Thank you.